Tonight, we're going to be discussing one of the most important and ultimately one of the most difficult things to do, and that's building your trading plan. It's not complicated. It's not complex. You don't need to go to school. You just need to bother to sit down and build your plan. And a trading plan is like a business plan. If you were going to open a restaurant or a clothing store, you would sure sit down and do all your evaluation. If you go into the bank to borrow money, you would surely have to have a firm designed, developed business plan, cash flow analysis, and everything else. Okay. Before the landlord in the shopping mall is going to sign a lease with you, you're going to have to go through everything. Well, if you're going to be trading, that's a business. So why shouldn't you have a business plan? Now, tonight in this class, I'm going to use the term security. And when I'm referring to any tradable financial instrument. This includes stocks, bonds, commodities, futures, indices, mutual funds, and options. Now, I may imply a specific investment product, like I might say CFD or Forex. Now, of course, tonight we're all here for ETX, and that's what you trade with us, CFD and Forex. But I might say share, which implies that these investment concepts, or which implies equities, these investment concepts will work with any publicly traded financial instrument in which an open market exists. Similarly, I intermix the terms investing and trading. Now, typically an investor takes a long-term position while a trader takes a much shorter-term position. In either case, the basic concepts and techniques presented tonight are equally adept. And again, we're here for ETX tonight, so we're talking about basically short-term trading, day trading, swing trading, and we're talking about trading CFDs, spread bets here in London, and of course, Forex. But these concepts will work any which way you decide to trade. If down the road you decide you're going to buy cryptocurrency, or you want to trade cryptocurrency, or you decide you're going to go in the options market, okay, same things apply. Now, the question is, should I buy today? What will the prices be tomorrow, next week, and next year? Wouldn't investing be easy if we knew the answer to these seemingly simple questions? Now, at last, if you're attending this class in the hopes that technical analysis and all the other things we're going to teach you over all of our classes, I'm afraid I have to disappoint you early. None of this is going to tell you what to buy today and what prices will be tomorrow. Nobody can predict that. However, if you're attending this webinar with the hopes that technical analysis, fundamental analysis, charting will improve your investing, I have good news for you. It will. And so will a well-prepared trading plan. In fact, a trading plan will help you a lot better and a lot more than spending weeks and months mastering RSI or stochastics or MACD. Now, in order to become a successful trader, you need to develop a written trading plan. Okay. We're not talking about a strategy now. Don't think we're talking about here, oh, I'm going to buy when RSI goes above 70. That's not a trading plan. That's your trading strategy. Okay. Now, this goes into your trading plan, but a trading plan covers all the necessary trading rules. It's basically your trading Bible. There is no such thing as the ultimate trading plan because there are no two exact same traders. A trading plan is very personalized. You can't even go really online and get a sample questionnaire that you're just going to fill out because it all involves you, the amount of effort you want to put into it, how much evaluation you want to do, and who you are. But every trader has a different trading style, a different strategy, different risk tolerance levels, and different market experience. It's always better to develop one's own personalized trading plan and modify it as your experience grows. Now, if you think of a trading plan as a checklist, now, you don't have to start out with this monstrosity of a thing. No. It can be added onto and developed with time. Again, let's talk about a business plan. If you had an idea for creating an app, an app for whatever it might be, but an app, that's the popular thing today. Instead of just saying a restaurant or a bar or a clothing store, you had an idea to build an app. Well, the first part of your presentation, because right now you're not even looking for investors, you're looking for a couple friends who might put in some time and effort and help you get it started. You might have a friend who does a little bit of creative work. You might have a friend who does a little bit of development. You might have a friend who's does this for a living. So you need to know, number one, you need to write down what you're going to do so you can explain it to them or give it to them. You also need to know what are the proper questions you want to ask of them. If they ask you, okay, this sound, I'll be glad to help you. Tell me more about it. You got to have more to tell them about it. You also have to be able to ask them valid questions and tell them how much you expect them. But this is it's not a summary because you're not summarizing anything. It's writing down your thoughts. It's the beginnings of developing your plan. So this is just where your trading plan can start out with. A trading plan should be thought of as a template for trading the markets. Perhaps an even better way to describe a trading plan is that it's a checklist. This checklist will contain every aspect of making a trade in a logical step-by-step sequence that acts as an objective guide to trading the markets. In essence, a trading plan will state your overall short and long-term goals as a trader and will provide you with a clear checklist of how you will achieve them. In order to build your own trading plan, you should put in it what trading strategy you're going to trade. Okay. Now, it can be modified and it can be changed. Today, you only know a couple things. So you're going to trade from, say, support and resistance, trend lines, and Fibonacci levels. Or you're going to trade whenever you see a triangle and a breakout. You also need a list, if you're in Forex, what currency pairs, or if you're trading CFDs, what types of CFDs you're going to trade. The problem we find with CFD traders is they can trade everything and anything. So they tend not to limit themselves. And the fact is, you can't be all over. When I started out 45 years ago, I was an agricultural trader. And you know what? That's a big market, but I traded orange juice and coffee, and that was it. Because you just can't physically follow all the details, all the information, and make good decisions when you're trading too many choices. Okay. Yeah, I know a lot of us, we go through and thumb through lots and lots of assets. We see, I'm going to trade it. Oh, I saw Apple in the headline. Uber made the headline. I'm going to go trade it. Okay. Even if you're trading currency pairs. Okay, maybe you say you're going to trade the euro and its crosses, and you're limited to the Japanese yen, the pound, and the US dollar. That's it, because you cannot possibly achieve success all over the place. Okay. You can't be an Apple expert and a Google expert and a euro expert and a cryptocurrency expert. It just physically is impossible. Then we have to come down to a very important questions. What are your daily routines? Now, most of us are part-time traders. We have a job, or we go to university, or we have a family we're taking care of. Whatever, trading is not our full-time occupation. So therefore, we have routines. There's certain days of the week that you can trade. So maybe the kids go to soccer practice every Tuesday and Thursday afternoon, and when you come home from the office, you have 2 or 3 hours to trade. Or maybe the kids go to bed by 9 o'clock, and so you can trade from 9 to midnight. Or maybe you only trade on Fridays, or maybe you're off on Wednesdays and Thursdays. So you have to figure your routine, because you cannot successfully trade by just bopping on the computer whenever you want. Because you find assets have personalities. The markets have personalities. And you have to be aware of these little tiny intricacies that happen throughout the day. So again, what a trading plan does, it keeps you out of trouble. So the question is, where do I start? So you should begin your trading plan with your trading strategy. Most of us have some type of strategy. However minimal it is or however complicated it is, that can be your first step. But it's actually physically writing it down. And that's what we find the hardest thing to do, is actually take these things we have in our head and put them on paper. And you'll find when you do that and you put it on paper, you find where you have errors, you find where you have oversights, you find where you have to put in more details. But so if you're trading price action setups, you're paying off key structure levels, you're structured trading or advanced patterns, then you should put them in first. Put what you're doing now into your trading plan. That's what I'm saying. Before you get in this complex plan, just start somewhere. Today we have Excel spreadsheets. We have all this computerized stuff that allows us to build this trading plan relatively easy, because it also gives us the ability to search and find everything and use this trading plan once you have it. Okay. Now, most of us, unfortunately, don't back test our strategies. So you'll find when you put your strategy on paper, you've worked out all the kinks, because now you're forced to get out of your head and onto paper, that either you're going to test it forward on a demo account or use one of the online services where you can back test it. Backtesting allows you to take your strategy and implement it in the past, because it just keeps track of and you can implement it 6 months ago to see what happened the next 2 hours. And you can test it over and over historically. Now, this sounds like a lot of work, and it is. It's time consuming. Some people don't enjoy it at all. Some people think it's like being in school. Some people think it's like writing a term paper, writing a thesis, and it really is. I mean, could you imagine? You decide you want to open up a clothing store. You decide you're going to open a restaurant. Now, at what point do you decide how many tables and chairs you got to have? Well, that's not a very complicated thing once you figure out a floor plan. How many pieces of silverware do you need? How many glasses do you need? How many refrigerators? How much space you need? Then it comes down to how many green beans you need to buy, how much lettuce you need to order, how much bread you need to have. Okay. Because you know what? If you mess it up, all your stuff's going bad and you're throwing it away, or you don't order enough and you can't fill the items for your customers. Somewhere along the line, you have to build a menu. You have to verify and check the prices. Not just, okay, the guy down the street selling a 6-inch long Subway for $8.69, so I'll sell mine for $8.09. Well, what happens if it costs you $9.10 to produce it? This is what your trading plan does for you. So in addition to your strategies, you need to put in your risk tolerance and money management rules. Now we find most of the traders that lose their money and that face losses and that wipe out their initial account is due to poor risk management and risk tolerance and money management. Because you'll find out, if you know how to apply your risk tolerance, you know how to apply money management, you know how to calculate your risk reward ratios, you should not get wiped out of the market. Yes, you may not be one of the successful traders, but you shouldn't wipe out your account overnight. So this is an important factor. Again, you figured out how much lettuce you need, what your menu items going to be, figured out how many chairs and tables you have, how many hours are going to be open. Now it comes down to hiring a chef and hiring staff and waiters and waitresses. Well, how do you know how many you need? How do you hire them ahead of time? How can you cover their payroll? How do you know how many people are going to come in your restaurant when you open the doors? Tough question, isn't it? But if you don't manage your risk and your exposure, you have one or two things happening. You have lots of people and not enough food to feed them, or not enough waiters to serve them, or you have too many waiters and too much food and no customers. So it takes effort and time to balance this out, because if you don't, you have lots of waiters waiting for their paychecks with no money coming in, and then a few customers you have are going to complain that the food's terrible because you don't have everything they ordered. And guess what? You lose your business. So having written strategies with your risk tolerance and money management is like having a market blueprint. This blueprint is essential for developing the discipline that it will lead you on the road to success. If you find yourself not following the rules in your trading plan, then you know you're deviating from your plan. And see, this is it. When you write it down, first of all, you filter out everything that's in your brain, but then you have to follow steps by step by step, but by what you wrote down. And when you deviate, it's obvious that you're deviating, and then you have to come up with a reason for the deviation. So one of the easiest things to do is, okay, after you put your trading strategy in, figure out what assets you're going to trade. Write them down on a piece of paper. It'll stop you from running over and trading Amazon when the headlines come out and they say, Jeff Bezos is going to do this and this and this, or trading Uber because they lost their license here, here, and here, or trading the pound because of Brexit. You'll stop yourself from running around. You'll find when you stop yourself from running around and looking at chasing too many assets, you can become an expert at the assets you want to trade. So it's not hard. You can always add. You can always subtract. But start out somewhere. Now, let's go back to we talked about personalizing this based on your trading opportunity, your time. So you need to have a routine in your trading activity. In your pre-market phase, you will write all you're going to do from waking up to what you're going to do before you sit at your trading desktop. Now, we're not talking about, okay, I'm going to take a shower, I'm going to brush my teeth. That's not important. Okay. What is your trading plan? What are the steps you use to approach the market? Okay. Because just because the market is there, and the market's there all the time, doesn't mean you have to be online, and doesn't mean you have to be trading. So you could say, all right, I'm only going to go on the ETX platform on Tuesday and Thursday evenings from 6 to 9 p.m. Yes, you can go online and look at assets, you can do everything, but I'm only trading these 2 days. So the rest of the days when I get the kids off and we've had dinner, I'm going to go look at the economics count. I'm going to go look at the headlines. I'm going to go look at my charts. I'm going to do some more chart analysis, because there's always a trading opportunity. And this is the hardest thing for people to understand. The markets don't control you. You control the market. There's always, 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 always a high probability trade. It's you spending the time to filter them down. So when a trading opportunity occurs, you can take advantage of it. Okay. Me, I have months that I don't get more than 10 or 12 trades in. Doesn't make a difference. What makes a difference to you? How many trades you make, how many hours you spend on the platform, how excited you've been, or how much profit you made at the end of the month. So during your trading phase, you will follow your checklist. This is crucial in order for yourself to put yourself in high probability trading opportunities. Remember this word, HPTO, high probability trading opportunities. The only trades you should ever be executing are those that fill that high probability, not ones, I think I'm going to get rich, I'm going to make money, it's going to go this way. Only those that you have filtered down so much that you think it's almost impossible to go wrong. Now, believe me, you can lose as much as you can make. But once you've filtered out and come down to only the best opportunities. Then you'll apply your risk management and your money management skills. And this will include things that you look for in the markets and what you want to see before entering a trade. Now, this is all pre-market. Then we have post-market. This is part that almost nobody does, most people hate, and I enjoy. I have my original undergrad degree in accounting, and I was truly an accountant. I love to crunch numbers. And it's important. I mean, even the most successful businesses around the world have learned over the years that having business analysts and analyzing everything, especially with computer online stores and stuff, everybody's become aware that it's all a matter of crunching numbers, making sure you're only getting the best and you're not wasting a penny here and you're not wasting a penny there, that you're only making the best business decisions possible. And you find if you don't analyze those business decisions, that you think you're doing the best, to only learn that you're not. When you go back and look at it, you might have had a couple memorable trades in gold, so you think you're really doing well with gold. But when you look at it over the month, you did much better trading the euro US dollar than you did trading gold. So if you would have left all those gold trades out and just doubled your investment in the euro US dollar, you would have made a lot more money. But because you didn't analyze it, you didn't see it. So your main activity will be record keeping your trades. A trading journal is important because it allows you to analyze your trades and to find out whether you follow the trading plan or not. So let's say you want to start your trading plan. So you're going to start tonight. So putting down a routine, that's not difficult. What days you know that you have time to trade. Whether it's your lunch hour work and you have a 2-hour break in the afternoon, or you take the train home and it takes you 3 hours to get home so you have time to work on your laptop, you decide. Nobody's telling you what it has to be. You decide what assets you're going to put into your trading arena. Okay. Then that's easy. Put in a couple of the strategies you're going to use. I'm going to check my RSI. I'm going to check my MACD. I'm going to check my trend lines. Okay. Well, guess what? You've already got something started. Okay. You've got a good edge up here. Now the fact is you need to analyze every single trade you make. So in order to do that, you have to have some way to write down the trade, how you made your decision, where you'd enter the market, where you're going to exit the market, how much you're going to invest, what your risk tolerance was, okay, and a note about how the market is. Okay, well, I'm going to trade this, this, and this, but we have some headlines from Merkel today, and we also had this economic event, and tomorrow we have. So this is just written in your little synopsis because 2 years from now, when you need to go back and apply that, and you want to see how you did on that trade when you traded that 2 years ago in the same situation, you can see what was happening. That only takes you a couple minutes. Okay. But it also forces you to write down every part of your trade before you actually go on the platform and initiate that trade. Okay. So you've got it all down in numbers. Now, on the other side of that is when that trade is over, how much profit did you make? How did you do on the trade? Because everybody thinks their trades were good because they made money. Well, you could have made a terrible trade but still walked out with a profit. Okay. The market didn't do anything you thought it was going to do. Didn't react to what you thought, but it happened to be that you got out with a profit. That wasn't a good trade. Okay. Why? Because your analysis was incorrect. Well, once you get that on paper, you're going to find out what your problems were and make sure they're improved. So make sure that you maintain a trading journal which has a log of all your trades. This is most important because it allows you to analyze your trades and the success of your plan. It should include the entry date, the entry price, the exit price, the stop, the limits, the total profit and loss, and the final notes, which are your personal notes on each trade. So I always tell everybody at this point, on the ETX platform, you can export all of your trades after the trades are over out directly to an Excel spreadsheet. Well, that gives you some numbers, but it doesn't tell you why you made the trade. It doesn't tell you what analysis you did, what strategy you employed. Maybe it was a breakout from a triangle. Okay, you're not going to remember in 2 years now, but you're going to want to know. So, as I was saying, your daily routines are crucial for your trading success because based on them, we build a ritual that will help us maintain a high level of focus and a state where we perform at our best level. Now, the fact is, if a professional football player, a professional basketball player, a tennis player, okay, or a race car driver can go through not only the rituals, but practice rehearsal. Look at that. A soccer player has to learn every single play. He has to learn every player on the opposing team. He has to know exactly what they're going to do, what they're expecting, and has to practice every play over and over and over again until he has it down pat. Well, granted, they're getting paid millions of pounds or millions of euros, but they're professionals. Why shouldn't you have to go through the same effort that anybody that's at their best level and successful have to do? So your trading plan should contain a written description of what you will do in the markets. This includes things like what is your trading edge, how you trade it and when you trade it, what time frames you trade, your strategy for risk management and profit taking, and your overall goals as a trader. And I use this word stick-to-itness. The creation of a trading plan is highly useful as it reduces the possibility of bad or irrational decisions based on emotion or just lack of good judgment at the moment. If you have a written trading plan, then you have a trading filter that will filter only high probability trading opportunities. Remember we talked about that? OHPT. You only want to spend your time on high probability trading opportunities. It's important to have a written plan because in order to keep a high level of discipline, you should read it every day. And you should follow every step and have a checklist before you initiate the trade, because that way when you're writing down, okay, I'm going to trade, I'm going to buy the euro and I'm willing to buy it at 160, 132. I'm going to put my stop loss here, my take profit here, and I've written it all down. Guess what? When you go to the platform, you're going to do exactly what you wrote down. So the key to discipline and objective trading is to establish a trading plan where you put all your necessary rules and stick to it. Now, the fact is, I know I'm talking to a lot of people out there tonight that are sitting here saying, why am I going to do that? Or they're all shaking their head saying, yeah, I'm going to do that, I'm going to do that, I'm going to do that. But I'll tell you, if I ask 100 traders that have come to my classes to send me a copy of their trading plan, not even a detailed thing, send me your checklist for the last trade you made. Guess what? I won't get one. I've never, in all the years I've been teaching, have ever seen anybody's trading plan. Because people just don't, in this world of online instant gratification and this world of online trading, they just don't do it. And this is one of the reasons there's such a high failure ratio. It's like going into a bank and asking for a business loan, and the bank manager doesn't ask you for a business plan, doesn't ask you anything. He says, oh, if you put up your house, we'll give you whatever you want for whatever reason you want. He doesn't care, because he doesn't care if you lose it, because he's going to take your house. But a good bank manager is going to say to you, can I see your business plan? Can I see your cash flow analysis? Can I see your P&L statement? So unlike business owners who generally have a business plan in order to provide a strategic vision to employees and to stay focused on their primary line of business, most traders never take the time to create a business plan or a trading plan. Now, there are millions of articles out there on the web about trading plans, but I'll tell you, unfortunately, If you read them all, they all tell you the same thing. And today I was trying to pull one up to have it for other than just this for class. And I found that most of the articles I read were the exactly same articles. Somebody's just rewritten article after article after article after article. And there is no actual, and there never has been, never probably will be, like this guide or questionnaire on how to build a trading plan. Because I'm going to tell you what's needed in it. It's not like you can buy business in a box that will build you a business plan that you just have to drop in numbers. Maybe one day somebody will develop an app for it, but the thing is, it's too personalized. And if you don't do it personally and you're just filling something in that somebody gave you, guess what? You're just trading somebody else's strategy. You might as well just really trade their signals. Now, one of the most important parts of your trading plan is your post-performance. Okay, and it's how you will evaluate your performance and when you'll evaluate your performance. Now, the question is, how can you figure this out and will you do it? Now remember, time is irrelevant in the world of trading. Trading is one of the few areas in this realm where the space-time continuum has no relevance because the markets are open and there's always a trade to be had. So my rule of thumb, and which I would advise all of you to come up with, my rule of thumb is I do my evaluation after every 10 trades. Depending on your trading, you could be a guy who trades 10 trades in a day or an hour. Okay. So to understand me, this applies for both my swing trading and my day trading activities. On average, it would take me about 3 months to place 10 swing trades and about 4 days to place 10 day trades. So that means I'm doing my evaluation once every 4 days, once a week. I only mentioned the time element so you can see how long it takes me to place the number of trades based on my trading style. But you can easily perform the same math in your head and figure out what works best for you, as long as you have a guideline. So what is the number of trades you will use when evaluating your trading activity? How will you evaluate it? Okay. You have to decide what type of evaluation, but it's important to look at all the trades, see what risks you had, see how they ended up, and decide whether, like I said, just because a trade made profit doesn't mean it was a successful or a good trade. Okay. A trade that you got stopped out at minimum loss because some headline came out or the market moved against you, that was a successful trade. Okay. Getting out of the market with the least loss possible when you made a bad determination or the market turned against you is a very successful trade, because that's what you need to do. So remember, goals are very important. You should have short-term goals and long-term goals. But of most everything is avoid over trading, be patient, remain disciplined, and stick to your plans. So a goal without a plan is just a wish. Again, you can add more and more strategies. Okay, you can have one strategy for flat markets, a different strategy for uptrending markets, a different strategy for downtrending markets, a different strategy for the beginning of the month, and a different strategy for the end of the month. You can have all that you want. But like I said, once you find out that you wrote one out and factored all the things in that you were missing that you just had in the back of your head, you can just keep adding more and more and more and more. But like I look at every morning, I drop on my levels of support and resistance to all of the charts that I'm trading with. Okay, I check my trend lines. Okay, I check my chart patterns to see if there was a breakout in a pattern. This is part of my daily routine. Okay. Then your trading plan has to include where you place your stop losses and how you place them, when you would exit a trade or how you would exit a trade. All of these things are important. They're not very complicated, but they're important. And to be honest with you, how can you ever make a trade on our platform if you don't know where to put your stop loss, where to put your take profit, what limit order you want to place, how long you're going to stay in the markets, and what you're going to do? Okay. So if you figured out your trading plan, you got it. Now, also keeping a successful attitude, a winning attitude, okay? And when you find out that you're following a trading plan, and even though you have a bad trade, you won't find that your attitude goes away, because you find that as long as you stuck to your trading plan and you got out without losing your shirt, you did all right. Okay? And part of your trading plan is how much money can I use per trade? And how much money can I have in the market at any given time? I mean lots of guys that limit their trades to $200 exposure per trade, but they'll have 20 ongoing trades. So they actually have $4,000 just out in the market of their account. Okay, I never do that. I limit myself to 1 or 2 open orders at any given time. They're in the end. Okay. Then the question is, when do you take a break? I meet guys in class, I meet guys online, I meet guys in the office, and they trade. I ask them, when did you just stop and shut down your computer and not look at the markets? Well, I personally recommend to everybody, once you've completed 100 trades, whether you're trading 10 trades a day or 10 trades a week, you say, once I've finished 100 trades, I'm taking 2 days off from the markets. And that means not going to the ETX platform. It also means not looking at the financial news, not working on your charts, not doing anything. Because you find, and it's not on a holiday weekend, it's not on bank summer holiday. You'll find by doing this, you'll realize you control the markets don't control you. And if the markets start controlling you, it's like realizing you're getting addicted to something. Okay? If you realize it early enough, you can stop that addiction. So after 100 trades, if my rule is I just take 2 days away, I don't have to physically go away. I just don't look at the market. I do something else in the evening or the afternoon. Okay. It's a self-imposed break that goes back to discipline and exercising your control over the markets. The other thing is, how much of my trading capital do I have out there? Okay. And at what point do I leave the markets or do I stay in the markets? Okay. It's when do I take a break? Not just, we talked about 100 trades, but when do I stop today? When do I say I've traded enough today? So my rule of thumb is, if I ever lose 2% of my trading capital at any point during the day, my assets have all turned against me, I just close out my trades, exit my positions, take my losses, and go away. Okay. Just come back tomorrow. On the other hand, if I got 4 or 5 trades and one of my trades jumps way into profit, I take my profit, I close out my other trades, and again, I walk away. Okay. It's who is in control and is not putting your money back in the markets. If I have one good trade and I've made myself a lot of money, I don't need to stay there and find that I'm overconfident and I end up risking it and putting it all back in the markets. I turn off my computer and I come back tomorrow when I'm more steady and my emotions are back under control. Just like when I have losing trades, I control myself by closing my positions, take my loss, bite my tongue, and come back fresh tomorrow and not chase them. Now, the best sample trading plan I've been able to find is this one on your screen. You can find it in the internet. It's very easy. Just do a search for Forex trading plans. It doesn't help you much. Okay. But just as a starting point, write these things down, follow this guideline, start somewhere, and keep defining your plan. It doesn't happen overnight. But you find when you can move yourself from just trading to occupy yourself with the skill of trading, your chart analysis, your market analysis, your market research, your trade analysts, everything, you'll find that your enjoyment can perhaps not be from that immediate gratification of making a trade and saying make a profit. It could be sorting out and filtering down only those high probability. Maybe I can sit down and say, look, last month I made 25 trades and I ended up $50 for the month. This month I used my trading plan. I only made 8 trades, but I ended up $1,000. So next month I only want to make 6 trades and I want to be up $1,500. And you keep finding ways to improve your trading by increasing and adding to your trading plan. So on that note, I'm going to say goodnight to everybody. Thank you very much for joining us. Thank you for supporting ETX. And we'll talk to you on Wednesday. I think we're doing Fibonacci levels on Wednesday. I'm not sure, but you have the schedule. Have a great night now, and we'll talk to you again real soon. Good night.